Welcome to the Regenaissance Podcast. I'm your host, Ryan Griggs. Visit www.theregenaissance.co to learn more.
Hello, everyone. My name is Ryan Griggs, and I'm the host of the Regenaissance Podcast. Today, alongside me, I have Brandon Welch from Mad Capital. Thank you for joining me.
Thanks for having me. Good to be here today, Ryan.
So to get started, for my listeners, I know I talk with anyone revolved in the agriculture space, and that's also with financing and economics, which I've yet to really talk to anyone in the space. And that's why I know before this podcast, I mentioned that I was thrilled that I discovered you on LinkedIn, because this is something that I've really wanted to talk about. Because on one hand, I guess wanting to give a little oversight first before diving in with just the whole world of agriculture, because one of the many reasons I have this brand is for educational purposes. I mean, the average age of the farmer has continued to get higher and higher, and a lot of them don't have an heir. A lot of folks aren't switching into the agriculture space, and especially in the younger generations, because rather than doing a lot of backbreaking work on the farm outside all day, they would rather be inside playing video games or working a tech job just in a comfy AC. And so it's been quite challenging with just, I guess, that outlook. And so one of the ways I've thought about too that's given me personal hope for it all outside of what just happened with the election is the fact that there are so many people that are waking up to regenerative agriculture and to just our food system and, food is medicine and just everything that's happened in America's health system and globally too. But not everyone wants to be a farmer or rancher. So how could we help drive that? And I think that could be a good segue into Mad Capital, because I'll just leave it at that and just segueing into everything that you're doing at Mad Capital, because I know you said you've been doing this since 2019. So I'd just love for you to just, explain who you are and, some of the things that you do at Mad Capital.
Yeah, well put. I mean, I think that the challenge is that, farming is a business, and over the years it's become more commodified, and it's more challenging to make that work as the economics have continued to get squeezed with big ag actors that continue to gain more power, and it's leaving the family farm not necessarily out to dry, but just in a much harder position of being able to navigate some of those challenges. So back in 2018 and 2019, I ended up touring a variety of farms and just traveling through the Midwest with my co-founder, Phil. And we were just trying to hear from those that were on the ground, stewarding the land, what their challenges, struggles, problems were. And we kept hearing some of these recurring patterns. It was access to right fit financing, trying to find new markets, the cultural hurdles that farms have to navigate, the challenges around finding good practical advice on how to make a transition. So we ended up standing up a family of brands called MAD that helps really surround our farms with more of a holistic system to help them navigate some of those challenges. So, we started with a nonprofit called Mad Ag that really gets in on the ground, these guys roll up their sleeves and get in with producers and help them create a farm and business plan to navigate that transition. We launched Mad Markets, which helps farmers access higher value offtake agreements, and they're specifically focused on USDA certified organic specialty crops, and then they're hoping to expand into additional cropping systems and also meats at some point. And then we also started Mad Capital, which provides long-term flexible loans to farmers that are looking to navigate a transition to either certified organic on the row crop side or to more perennial-based, grass-fed, holistically managed beef. So we're, collection of entities. We've got about 22 people working across all three, influencing and working with farms that are on about 300,000 acres of farmland. And, on the Mad Capital side, which is what I've spent all my energy and efforts on since 2019, it's, money is a key input into the farm, whether it's buying seeds, buying new cattle, being able to pay for diesel, cash rent, purchasing farmland. Without money, the farm can't operate. It just doesn't work. So we're just trying to be a more aligned, understanding partner that's able to come alongside farms and help them navigate different challenges that they may come up against.
So whenever you were doing that initial traveling and touring around, I'm curious too, because you mentioned some of the immediate pain points. And if this was a while ago, I'm curious now, have you spoken to any of those same farmers and ranchers since then? Because and also I'm curious if, actually, let me reframe this question. Can you give an example, I guess, that have gone through Mad Capital since the beginning, and and would be curious to hear about their experience through all of that too, and how that partner or relationship has worked.
Sure. I mean, one example, we have a farmer in Minnesota that we work with. He started farming about a decade ago. He got about 5 years in. During that time period, he was able to transition the family farm, which he inherited from his grandfather, about 200 acres, to certified organic. Then he had a leasing opportunity on about another 400 acres that came up really close to the home farm. He found us through a recommendation through a friend, reached out, and we were able to start understanding a little more about his business. And we really liked what we saw. I mean, he's a dynamic, ambitious farmer that cover crops, is minimizing tillage, uses a long-term rotation, and he wanted to transition this other 400 acres to certified organic. But he had already tapped out his funds with the FSA because they're limited on loan size, and then he just wasn't getting good response from local banks. They just weren't comfortable with organic transition. They weren't comfortable with organics generally. And when he found us, because that's what we specialize in and that's all we do, we were able to work with him to create a loan product that really helped him navigate that cash flow trough during the 36-month transition phase to organic. So we were able to start working with him about 2.5 years ago. He's since taken on an additional 200 acres, and now he's operating on 800 acres in Minnesota, on track for all that to be certified organic by roughly the end of 2026, early 2027. And he's got ambitions to grow from there, to build his team, and it's encouraging because he's in his early 30s. He's making the right decisions, and it's been exciting to learn from him and partner along the journey. And I think we've been a really additive partner for him as a young farmer to help accelerate him to go further faster than the traditional financial system was maybe willing to go with him.
That's very cool. I'm curious too. You mentioned about the local banks um, not really on board with the whole certified organic. Do you know, is that common among banks, or is that just how it was where he was at?
I do think it's regionally specific because there are definitely some banks out there that are comfortable with organic farmers. I think it's based on the comfort of that loan officer, the board of directors, and then their underwriter. And it varies. I mean, there's definitely some aspects of farm credit who can get comfortable with organic and local banks. But generally, what we find is, I think because it's still pretty rare to be an organic farmer, it's about 1 in 100 farmers, is that loan officer knows that right behind that organic guy, if, I mean, think about it this way. You have an organic farmer that comes in to the bank. They say, hey, I've got this opportunity to take down another 500 acres next door. I want to transition it to organic. I need some operating cash, but it's going to take 3 years to transition it. Margins are going to get super tight, and I'm going to sell into this market that you've never heard of. The perception of the risk that the banker has is maybe much higher than the reality of the risk, but they know that if they deny that farmer, they've got 99 other guys behind them that have just been growing corn and beans for the last 30 years, and they're going to be able to make their quota or their quarterly goal. So I just don't think there's enough of an incentive for many community banks or the big dogs like Farm Credit to really take the time to roll up their sleeves, to understand a farm's transition plan, and to then just do the work that it takes to saddle up next to them and to partner and to ride through that J curve on the way to certified organic. So it's nuanced, but I mean there's enough of a friction point there to where we've been growing and now have 36 farmers that we're in partnership with financing, and these folks are operating on about 117,000 acres of land. So there's enough of a gap there to where we continue to see more farms every week than we've seen the week prior. So we're solving for something, even if we can't explicitly name it.
That's awesome. And that's, I just lost my train of thought. I had something there. Um, wow, my mind just went straight blank. This is why I'm glad that this can get edited because I had
All
something
good.
there.
All good.
Uh,
Yeah, talking about working with community banks, farm credit. I'm not sure where you wanted to go. Their lack of comfort, maybe the cultural divide.
oh, so yeah. So actually, just that it's just very interesting and bring up the good point about the 1 in 100 or 1 in 100 farmers are organic, and how the fact that I didn't even think about just even you just laying it out. It makes it sound so risky. And then this goes back to, I mean, why I have this brand is we just have massive disconnect from our food. And that's also could be shown with the actual bankers because they probably have no idea about all of the work that goes into, like you're saying, that with a niche market with organic food and, slimmer margins at the beginning. And you just essentially you have to trust the process. He or she is not gonna realize that if they are disconnected from their food, like majority of America. So that's just awesome too. Why like something like Mad Capital does exist. I guess that's my next question would be: say a farmer comes to Mad Capital, because I know we're talking a lot about certified organic requirements. Are there certain lists of requirements that you have for a farmer or rancher whenever they come to you when looking to potential partner?
Yeah. Yeah. So on the row crop side of things, that farmer has to be transitioning land to certified organic, or have already transitioned land to certified organic while using regenerative practices. And this looks different because it's obviously context and ecologically dependent. So in some regions, it may make sense for them to use conservation tillage and cover crops. In some regions, and based on the operator, maybe they're more comfortable with a longer term rotation and introducing perenniality. So on the row crop side, that's what it looks like. On the livestock side of things, we do not require ranchers to be certified organic. We just want to ensure that they're operating and managing their animals right fit for the landscape, so they have a appropriate stocking density, and they're ultimately using holistic management to a degree that's improving the landscape over time while producing a healthy meat for people. So I guess just to put it simply, on the ranching side, we're mostly looking for grass-fed, holistically managed beef operations. So it's not that there's a problem with a conventional farmer that's starting to cover crop or use no-till. We've just really chosen to get super narrow and focused on organic farmers on the row crop side, and then regenerative grazers, because we found that those are, in our opinion, some of the most innovative operations that are out there, and we want to help them go further faster. And there's other partners that we refer farmers to all the time that come in and maybe just aren't a right fit for some of our more impact oriented standards.
No, on the actual, I guess, nitty gritty details of it all, say, like, for example, the young Minnesota farmer, do you go like case by case basis on how the actual financing works, or what does that actually look like? Because, for example, for some listeners, this actually might interest them to start actually looking into their own piece of land for homesteading or what have you. And would just love to actually talk about the financing of it all.
Yeah, so we do underwrite all of our loans and evaluate all of our farms case by case. That is a differentiator compared to many other ag lenders that are out there who use what's called scorecarding, where they may just pull a farmer's FICO score, their gross farm income from last year, and the loan to value, and make a loan decision simply based on that. We use 5 years of balance sheet and P&L information to essentially create what's called an underwriting spread, where we can look at the farmer's historical ability to, produce cash and grow a crop or raise animals, and then use that to help inform a 3 to 5 year projection. And then based on how the numbers look, what we can do is kind of tailor fit a loan in terms of the payment schedule to really match the needs of the farm based on their growth or transition case. So many times that involves an interest only period, where during a transition phase when the farmer really needs cash to invest into the operation and to navigate, growth, where they're taking cash, converting it into crops or raising more animals or investing into their D2C brand. It gives them the breathing room to navigate that trough to the other side. And then what we do is work on restructuring the loan and amortizing the loan out over a longer time period, so that they can then afford, to pay down the debt well, after the farm's gone through that transition. And that's the challenge with debt is it's not a fit for everybody. In many cases, equity, if they could find an investor, it might be a better fit because, debt's a double-edged sword. It's in senior position. It has to be paid back primarily compared to, someone in a junior position or an equity position. You're signing a personal guarantee, putting up collateral. And that's why we really want to be confident in partnering with a farmer that there is excess kind of margin of safety for them to be able to navigate that and ensure that they're in a good position on the other side. Because the last thing we want to be doing, we've failed if we make a loan to a farmer that then cannot pay back the loan in a timely fashion. We haven't done our job well, and we need to be really careful to make sure that we both have skin in the game, but that we're also supporting farms where debt is the right instrument, because sometimes it could be equity, or maybe no investment at all, and sometimes it's just pure kind of sweat and grit that someone has to put in. So definitely we're mindful of that, and really try to also provide some advice, because when we get into the nitty gritty and we're looking at a farmer's balance sheet and, we notice that maybe they're taking on too much leverage in order to then invest in growth, but that growth isn't maybe paying off as fast as they're borrowing, that could put them in a tight position where they're then forced to sell off assets down the line, and they may not have the cash flow to support the amount of debt that they've taken on. So, for us, being able to partner with folks that are going to be around and continue to be in a better financial position over the next 10, 20, 50 years, it's in both of our best interests to make sure that we're putting together a package and a loan structure that's going to ensure the farmer's success.
I'm curious now with that then, just from your experiences with Mad Capital, what are some ways that you've seen that farmers or ranchers could just be better with their finances overall, especially for the long term of agriculture, because it's so challenging. It's weather dependent. There's just so many different moving variables that it makes it quite challenging. That's why a lot of folks don't understand why there's so many challenges for the farmer and rancher. Just be curious from your experiences. Are there any ways that you've worked together and saw that could really benefit to any other farmers or ranchers that might be listening?
Sure. I would say farmers and ranchers should carry more working capital than they think they need, carry more inventory and more cash than they think they need to make it through the next season. Having that buffer can be really helpful if things end up going sideways on their current season, because the market maybe dips lower than they expected, or maybe they couldn't produce as much yield or raise as much beef as they expected. Having that extra margin of safety, though it means that there's going to be less growth because they could have put that cash to work to grow the operation, is going to make the farm more resilient. I'd say that's one. Carry more working capital than they think they need. Also, carry a lower amount of leverage than maybe they'd like. Though it means sacrificing growth, having a 60% equity ratio, a low debt to asset ratio leaves, again, another margin of safety to where if the farmer needs to borrow because they have had a tough season and they need to borrow again against assets, they have the ability to do that. They have an out. And we've seen a few farms that have continued to borrow more and more and get more levered. And then they have a tight degree of working capital. And then they just have minimal options on how they're going to, they just don't have as many pathways. If they end up having an unexpected, hailstorm that wipes out a substantial portion of their crop. So I'd say, carry less leverage than they'd like, hold a pretty substantial working capital buffer, and work with a CPA or an accountant. I think every farm should hire an external accountant. I think it's just added work for them to learn how to use QuickBooks. It's having your financials buttoned up and in order with a third party. It's really helpful I think for the farmer or rancher, but also for an external financier who wants to look and just see a super clean balance sheet and P&L.
Thank you. And I guess then also just on the topic of, say, bad capital versus having an actual investor, because I guess we can talk it on both sides of the actual consumer and then the producer, because I was trying to allude the fact that there are people out there that might have the capital to where they could invest in a farm or ranch, or they could also just potentially do something like mad capital with their financing. So I guess in the context of, say, a consumer that has extra cash, but they don't want to do the farming and ranching themselves, do you have advice for how they could go about, helping them make a decision on this topic, whether it could be to actually just reach out to a farmer or rancher that they start that conversation and to potentially want to invest in their ranch or go a different route? Because I know there's a lot of similarities and differences between these two, and I think there's just so much opportunity moving forward in America for these two to really help bring back the great farming and ranching in this country.
Yeah. At the end of the day, any group that's operating in the ag sector is dependent on consumers purchasing the product. All cash flows from that consumer all the way back down to the farm level, and then the farmer spends it on a new tractor or fixing their fencing or purchasing seeds, whatever it may be. But it all comes from the Whole Foods shelf or the shelf at Safeway. And if consumers really start voting with their dollars in a way that aligns with their values and wanting to transform the food system by being very conscious of trying to buy from a local, rancher that aligns with their values, by, purchasing organic food on shelf, that's ultimately what's going to influence the system to the highest degree, because that creates the demand signal and the premiums and the incentives for more actors in the entire supply chain, all the way back to, financing to ultimately support that system transition. So number one, I really encourage consumers to just do the best they can to purchase the highest quality food as locally as possible that has the highest degree of integrity baked into the food. And if they have extra cash and they're looking to invest, there's a variety of funds that are out there that are doing this work, whether it's through purchasing farmland and then leasing it to farmers on terms that are more favorable so they can grow their operation, whether it's on the lending side, such as what we're doing at Mad Capital. There's a variety of different actors that are out there. I'd encourage them to check out Iroquois Valley Farms, Dirt Capital, SLM Partners, Clear Frontier. There's a whole slew of groups that are working on this, and there is now enough scale and track record to where they could build a fairly diversified portfolio that delivers, moderate returns, because groups like us that are lending into the space, we have to balance the tension between the demands of returning capital to investors with the reality of the ecological constraints that the underlying land can realistically support over the long run. And that's a challenging space to operate in, but it is the hard work that we need to do if we want to direct vast capital into this space in a way that's non-extractive, but allows the capital of the soil itself to actually build over time.
I like the non-extractive because I think this could also just be a good segue in just talking about the traditional way that's been done in agriculture with lending. Would you be able to shed highlight on the differences and why you believe Mad Capital would be, or I guess is a better alternative to how it's been done, especially in the commodity markets of agriculture?
Yeah. The biggest difference between how Mad likes to think about lending and working with farms compared to much of the industrial traditional system, specifically in lending, is that many lenders are short-sighted and think on a monthly or a quarterly earnings cycle, but nature and ecology operate over multiple years to multi-decadal cycles. And at Mad Capital, we are trying to provide financing that is in line with natural principles. And that means that we have to take a different view and a more natural cyclical look at how farms can ultimately produce a crop or raise animals, where it's not as consistent as putting up a solar panel and being able to, sell kilowatt hours to the local utility on a daily basis. These farms produce at different rates through different times of the year over multiple seasons. And one thing that's great about agriculture is that based on practices that a farmer adopts, they can actually improve the productivity, the resilience, the consistency of the operation if they have the breathing room to invest in their operation and improve soil health over time. And Mad Capital wants to work to encourage that and have a longer term view rather than requiring a farm to convert their natural resources into cash over the shortest time frame possible. And I think that that's a big philosophical difference between how Matt approaches and works with farms compared to some of the more traditional actors out there.
I really like on the topic of just breathing room, because again, going back to just the economics is so tough for farmers and ranchers and very mentally challenging in a lot of ways. I've talked about in previous podcasts just on the topic of just suicide, because the suicide rate for farmers is higher than veterans, which I remember the first time hearing that earlier this year, and that blew me away. I knew that with agriculture it was fairly bad, but I didn't realize how bad that was. And one of the biggest reasons is financial stress, and especially with conventional agriculture too, to where you've heavily invested in so many different assets on top of all the land, on top of inheriting the land fourth, fifth generation, and doing it all conventionally. And then this huge push for regenerative agriculture, for example, just saying no tilling, so that's less machinery being used. What do you do with all that machinery whenever you're thinking about transitioning your farm on top of, again, going back to it's with transitioning regenerative agriculture, for a lot of examples, it's short-term pain for long-term gain, because you don't know what's going to happen in the next 2-3 years. Financially, you don't know what's going to happen as well. But then there's a lot of examples out there where folks have transitioned their farm and long-term increased their profits, increased their organic soil matter, increased biodiversity and wildlife. I mean, like Will Harris always talks about, when he was a conventional farmer walking outside, he was always looking for a thing to kill. And then as he transitioned back to grass-fed beef, and now it's a major regenerative operation, in his book, Bold Return to Give a Damn, he walks outside, he's like, wow, I completely forgot all of this wildlife used to be here, and now it's finally brought back because he transitioned all of that. And that's why I like with Mad Capital, it's giving that flexibility and like breathing room to where with that breathing room, you can just have more time to actually do the work and not stress about everything on your farm, and can actually figure out something to work long term. So that's why I love what you all are doing with this side of financing within the agriculture space.
Agreed. And we're always trying to push the needle in that domain. The challenge we find ourselves in is, we have to raise capital from investors. The money has to come from somewhere, and in order for us to ultimately move the big pools of capital that groups like J.P. Morgan and Goldman and Morgan Stanley are holding, we also have to be in. We also have to have like fund products that are enough off the shelf and familiar enough to them to where they can get comfortable. So we're always in the position where we're trying to innovate, give farmers enough breathing room, enough flexibility, but also at the same time, we have our counterparts that are demanding, shorter term loans, higher interest rates, and we have to navigate that complexity and try to marry those two worlds. And fortunately, we've been able to bring some amazing partners together to be able to scale into this space. And we're working and hoping to prove that, regenerative agriculture is actually less risky and is a better way of doing business than the traditional industrial, extractive approach. And it's going to take some time to prove that. But in addition to, MAD, there's dozens of other groups that are starting to really prove its viability in order to, improve biodiversity, to produce yield more consistently, to grow a healthier, more nutrient dense product, to help, reinvigorate and bring, rural economy back by increasing, farmer incomes. And we're really hopeful that the movement now, it feels like over the last 2 years in particular, the tide has really shifted. And what seemed fringe or a little bit kind of out there, on the horizon is now really starting to emerge into what I hope is a tidal wave of change over the next decade.
I definitely believe we're I definitely believe today is the start of that. It's wild timing on it all. Going back to finding money to, or I guess partners to add more funds to Mad Capital, is there a minimum amount that you all require?
On the farmer side, we're typically lending a minimum of about $250,000, and then on the investor side, a minimum investment size is 25,000 into our funds. That's limited by the administrative complexity of managing, an investment. But we did register this as 506C. So what that means is we can actually publicly market the fund. We can talk about selling securities. However, investors do have to be accredited in order to invest into this fund.
Thank you. And then just, I guess my final question I really have, I know you mentioned some other lenders too. Why should a farmer or rancher think about working with Mad Capital?
Yeah, we're a values aligned partner. We're only funding farmers that are transitioning to organic and regenerative organic production. We understand the 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 trough and the different challenges that someone has to navigate as they're investing in their farm. We like to pride ourselves on speed and just being responsive and being available. Whether you need to call or text us, we try to turn things around pretty quick. We hustle, and we can create some pretty unique, wonky loans that I think really do help accelerate a farmer's transition. We're not going to be the cheapest lender. We're not going to be the most expensive, but we are going to be a great loyal partner that's going to come along farmers' side and help them through any sort of challenges they may run up against.
I love that. And then also, actually, whenever you're mentioning the actual transitioning to regenerative or organic, I'm curious from your experiences so far, are there any, for the farmers and ranchers that have made that transition, where did the money go towards the most, I guess? I don't know if that's the right question to ask, whether it's new machinery or new buildings or infrastructure. I'm just curious on that.
Yeah, so some of the biggest pieces let me start over that question. The largest portion, I don't know why I can't phrase this. Um, our flagship loan product is a transition operating loan, and that transition operating loan can be used for, on the row crop side of things, seeds and diesel, cash rent, insurance, labor. Usually the hardest part that we see of a farm that's navigating a transition is having enough cash to make it through transition year 1 and transition year 2, and then roll into that next season with enough cash to purchase all the inputs and then be able to manage the crop throughout the entire season. So that's where an operating loan, to just purchase the bare necessities, to be able to navigate that transition, helps farms on the row crop side of things. And then on the grazing side, it's purchasing seed for reperennialization, maybe some minor infrastructure, wells, and fencing, and then also typically increasing the size of their herd and investing in some more animals. So we can play across the spectrum in terms of whether a farmer or rancher needs operating capital, infrastructure, equipment, or they want to purchase real estate. And it's really a matter of hearing it from the farmer or rancher, understanding their needs, and then we can work to try to be as responsive as possible to those needs to create a package that really works to help liberate them.
Perfect. Well, thank you, Brandon. I think that's really all I have on my end. I really appreciate you taking the time to be on here. And I guess with that being said, if there's any last things you'd like to share or anything that you'd like to plug, now would be a good time.
Yeah, thanks for having me today. I would say that if you're a farmer or rancher looking for additional capital, please reach out. You can find me at brandon@madcapital.com, BRANDON. And if you're an investor looking to support this movement, you can also reach out there. We're trying to do our best to support the food system transformation and encourage everyone that is, thinking about regeneration, that, it's a journey, and every step in the right direction is a good step. And we want to be supportive to the industry in any way we can. So please reach out. Would love to have a conversation. And Ryan, I just really appreciate your work in this space as a whole to really just act as kind of a cultural catalyst of having these conversations, because it all starts with joining, I think, what are many divides across this country, and food is really this center point and nexus that can bring everyone together. We all need to eat, and that's never going away. So I'm really hopeful, for food to be a way to really bring together a lot of divides in this country, and also be able to do it in a way that reinvigorates a lot of what this country was founded upon. So appreciate your work, and thanks for giving me the opportunity to have this discussion today.
Damn, mic drop. Well said. Thank you.
Visit www.theregenaissance.co to learn more.